Hello and welcome to this afternoon's webinar. As I said earlier, the third that we've done today. David and I started this morning at 7:30 our time, which has been actually it's been a really interesting day because mainly, although it's been a bit of a yawn fest for periods because the markets are quite desultory, a lot of choppy price action, sideways price action, but we've been very fortunate in both the previous webinars, both the Forex ones. Actually, as soon as we started, we had some really nice price moves, didn't we, David? It was really very good, and I can see some of you have been with us since this morning, so it's lovely. But before we start, as usual, there is a disclaimer. So please, you know, this can be a very risky business. So please don't even think of using money that you cannot afford to lose. Let's move that out of the way. Here we are, David and myself, and in this session we'll be looking at the indices. I think we're also going to look at some commodities. We've been writing about gold and oil in particular, and they're certainly both at, well, oil is at a very interesting point on the chart, and gold as well. So if you've got time, we'll have a look at that. But primarily we focus on the indices, sort of day trading the indices using volume price analysis and our quantum indicators with the Ninja Trader platform. So let me just take that out of the way. There we are. Let's move it. There we are. And here we are. I've got Ninja 7. David has got Ninja 8. I think, have you got the YM over at your side, darling? You got the YM? I've got the NQ. Let me just see quickly what's been happening vis-a-vis the other indices as well, very quickly. As you know, have to have a quick look at sort of general market sentiment. And we can see here, as I said, the S&P has sort of been flip-flopping about. It's only up, well, just over a point on the futures, whereas the VIX is down at 13, so it's a lot of complacency. And when you get complacency, you know, things tend to slow down. It means that, well, it means markets are in equity markets are rising, but they're not going to be rising very fast. In fact, it is a bit of a crawl at the moment. And when we look at the monthly charts, you will see why, particularly for the NQ, it hasn't quite got to the all-time high. And when, you know, markets go up, when they reach this kind of state, everyone gets a bit nervous. It's what we call climbing the wall of worry. Now, from a fundamental perspective, if you've looked at the calendar today, there's not a lot on. We've had the PPI data that's been and gone, and we can see here lots of Fed people coming on to the news wires, you know, giving their views on all sorts of aspects of monetary policy. And I thought it'd be a good opportunity just to see who these people are and how the Fed is currently made up in terms of hawks and doves. And I was really quite surprised actually, because as we can see here, they all pretty much sit in the middle. Obviously Powell is now the chairman. We've got two hawkish members, that's Qualls and Mester, and dear old Bully Bullard, who's always rolled out whenever the market's having a little bit of a swoon, isn't he, David? They call him Bully Bullard, who's very bullish on the market. I don't think I've seen a Fed make up quite in this way. There seems to be a sort of consensus of basically be neutral, keep it down the middle. It's a bit like, someone wrote the other day, it's a bit like Goldilocks. They don't like things to be too hot. They don't like things to be too cold. And I think one of them has said today that from a monetary policy perspective, the US economy is doing just fine. But there are all sorts of undercurrents. One of the people I follow, a guy called Chuck Butler over at FX Street, he looked at the trucking index, and there's a lot of vehicles on the road. So there's a lot of things in the undergrowth. We don't know what's happening. There's still the tariff thing with China hasn't been settled yet. The IMF has come up saying, you know, the economies, the global economies are at this delicate point. But what that means for us, that's awfully interesting in the background. We really just have to, on a day trading perspective, see what's going on in the chart. And what's far more important is really trying to get a sense of the sentiment. Is it ready to roll over? Are we looking at another narrow range day? Certainly, as markets climb higher, you will tend to find narrowing of spreads on the candles. You have to look at the volume. This has got sort of a nice sort of what we call a parabola look to it. This is the price action, the range that we're trading in today. It's, can make life very difficult. You have to be very patient. And as I said on the NQ, just quickly on the month, let's have a look. Yes, and we've just about cleared, last week, we've cleared the high of this volatility candle here with, you see a lot of volume, a lot of buying came in, supporting the market that we have at the moment. And also crucially, the last week and the week before, the NQ certainly managed to get over the volume point of control, which is going to give it a decent platform of support. But as I said earlier, it's the high that we're concerned about. So let's have a look at the high here, 7,756. Where are we? 7,750. I can't ever know which one of these. 7,756. So this is what it's creeping towards, and the only way we'll know it's going to get there is, we're still very early on in the month. But it's, it's done a reasonable reasonable spread on the candle. This is what's going to hold the key, is whether the volume is going to push it higher. The previous 2 months, we can see we've got rising prices and rising volume. A little bit of weakness there. But would you say, David, all in agreement from a VPA perspective as it tries to get to the high? But I want to go back to the daily because, as I said, this is what we're concerned with at the moment. But we have to be aware of this all in background. Okay, I'll turn myself off. Yeah.
Yeah, just on the daily. Just picking up on what Anna was saying, looking at the daily chart. What's slightly concerning is the two aspects really. First of all, as Anna explained, the price action as it appears from the last sort of 2 weeks or so, where you've got this what I call catenary, this arching of price action, which really describes a market that is getting into weakness simply because the candles are not moving higher. They're just trading in ever narrower ranges, and you see this flattening effect on the chart. In addition to that, when you actually eyeball the volume, certainly on the up days, the green candles, if you will, and the green volume bars, you can see that there is a general decline in volume as the market has risen. So ever since the congestion phase of, where were we, back end of February, I guess, in there, back end of March, that's middle of March, end of March. As that period came to an end, then you're starting to see, as the price action starts to climb, you're starting to see the volume decline also. So you're seeing this effect of rising prices and generally declining volume. And there's no particular reason for that, because we're not approaching, if we were approaching a summer period, for example, you could certainly say that was the cause of that particular decline, but we're not in that area. Yes, we've got some public holidays coming up, but nothing on that sort of scale. So it's just interesting to see, and it just reflects the fact that, as Anna said, it's the nervousness of the market as we approach these new highs, breaking out into new high ground, all of that. Investors, the big money, will start to potentially withdraw. They may be looking at the levels. They may be sitting on the sidelines and saying, well, actually, once we clear that particular level and get some decent clear water in place, then, I'm going to go back in the market. But for the time being, the big operators, the big market makers, all the rest of it are steering. That they are gradually withdrawing from this market perceptibly, and that is reflected in the price action as well. Just going to pass back to Anna.
But from a day trading perspective, that's a sort of that's a global view. What we have actually seen is, as usual, we've had the volatility at the open. Now this is the 3-minute chart, but if we go up to the 30-minute chart, because the 30-minute chart is one that I use actually a lot in on the forex charts that when I trade, because sometimes sometimes the hourly as well, but the 30-minute because I'm on the faster charts anyway. The 30 minutes is like a benchmark chart. I use the 30-minute CSI. I tend to. I don't know why. I think I must have read it somewhere, or some other trader that I read about mentioned the 30-minute chart, and I kind of picked it up from them. But but you could have another benchmark chart. You could have a faster chart. You could have a slightly slower chart. And looking for, as I said, we had the volatility and the sell-off at the open. Now, what's interesting for me is seeing that this actually triggered a volatility candle. This happens to be the NQ, but the same thing, the same kind of price action you will see on any instrument and any market. But because it triggered this volatility candle, and because of what we know how volatility works when the price action moves outside of its average true range, it's almost a given that it will retrace to within the spread of the candle. Plus, it also hit the volume point of control on the NQ. So once that first, people say, well, how long should you wait before at the open, the physical open? This has always been a big debate, hasn't there, David? Do you wait 5 minutes, 10 minutes, an hour? 4 minutes and 32 seconds. I remember once someone who was being mentored, and he was, as a new trader, the mentor was trying to explain about the volatility that happens at the open, as always, because lots of traders suddenly come in, from Globex, and we can see this. Or you see the volume here. This is the Globex volume, absolutely squished down, and you think, well, that kind of negates the VPA methodology, but it doesn't, because you have to read volume in context of the session and relative. When we started, Globex didn't exist, so it was just a fresh open, and away we go. These 24-hour markets, most things trade 24-hour markets on Globex. You just have to allow for that, which is why actually, I like to have the 8-hour chart, because the 8-hour chart is the 3 sessions, the day broken down into 3 sessions. Anyway, to go back to the 30-minute chart, where am I? Here we are. This trader was he was given a sort of strict set of criteria of when to possibly take the first trade, and it was, well, you have to wait. What was it? 10 minutes. 10 minutes. 10 minutes. That was it. You have to. There's a 10-minute rule, and well, sometimes that can work, and sometimes not. And the mentor was getting quite cross, because he said, well, you've allowed all these trades to slip through your fingers. So, and the poor guy said, well, you told me to wait 10 minutes, and in those days you got some fantastic moves after 5 minutes. So there's no hard and fast rule as to what time frame is going to, bench time you have to allow to elapse before you think there's going to be a half decent move. But so whatever you decide, that's fine by you. But the key is this: if there is a volatility candle triggered in your benchmark, i.e. this 30-minute, and then towards the end of it, we also have a wick to the bottom of the candle. Of course, we've got masses of volume because it's the start of the session. You can, I wouldn't say 100%, but you are going to get a retrace to within the spread of that candle, and the potential, certainly on the faster time frames, let's go down to the 3-minute, of taking a trade to the upside. And in fact, the candles are all characterized by lots of wicks to the bottom of the candle as the price has actually tried to move high. There's been some weakness, there's been some volatile price action. You've got a nice hammer candle coming in here, and that is how you have to read these markets in this at this particular time. Now, if you were sort of trader that says, no, I don't want to wait, and I want to get in there straight away, well, again, this is the open. You have the volatility triggered. You do get the retrace, and you have this very classic candle that is normally if you see it in a waterfall, is actually a re-entry candle with volume underneath it. The price has tried to rise, slam back down, and what you should do is wait. If it breaks below the low of the volatility candle, then that is, and all things being equal, I've got the Renko up as well. Yeah, if you want to take a punt on it, fine. That's up to you. That's within 5 minutes of the open. It all depends on what is your risk assessment of the chart, and you have to use the candle patterns, volume, and the volatility. I just want to go back to the 30-minute candle because this is also important. Now, what this also tells you on the 30-minute is that if the NQ is going to carry on higher, considerably higher, then it is going to have to take out the high of this third. So the volatility candle, the high and the low of the volatility candle also provide a further levels of resistance and support. What could also happen, because we don't have any news, we don't, as I said, it's all a bit because of the general feel of the market at the moment, it could simply congest in this range. And if that is the case and you still want to trade, then you're going to have to go really fast chart and perhaps try and snicker trade within the range of this 30-minute candle. It's actually quite an important candle, this 30-minute candle, because of the high and the low that's been printed by the volatility. We've not talked about support and resistance from a volatility perspective, but that is what we're looking at the moment. Now, if you are going to do that, then you're going to have to go down to a tick chart or something like a Renko and really wait, if there is going to be any firm direction. What isn't very encouraging at the moment is that we have this the volume point of control here, so there is a degree of consensus, if you like, around this price here, 76.20. So we're up 8 points at the moment. So wait until the trend, we get a series of blue trend dots, but more importantly, we actually get a change in the trend monitor. Right, that's my take on the NQ, which I will keep a close eye on. And we'll see if it can actually go higher and take out the high of that 30-minute volatility candle. I think, David, do you want to come over to you, darling? Is that okay?
Yeah, fine, yeah.
All right.
Thanks, Darling. And over on to Ninja 8. And you would think we rehearse these things, but there we go. I've been running on the fastest chart certainly one of the fastest charts on Ninja. This is on a 15-second chart. And as Anna said, when the markets are in this very tight range, you're not going to get a day today where you're going to have a big, nice, widespread up candle of certainly in terms of the YM 200, 300, 400 points, not going to happen. It's going to be tight, and therefore, as Anna said, you have to go down to the fast charts. And in this case, I've gone down to the really fast. This is 15 seconds. And what you're looking for here, you're looking for anomalies. It's actually a great way to practice VPA as well. What you're looking for are either very high volume bars or low volume bars. Of course, the other nice thing about this is 1520. We've got a lot of candles on here, but this is 15 seconds, so we've got 4 per minute. This is 1521 UK time over to 1539. But it means you're comparing like with like. So all the candles in here, all the volume bars are perfectly valid. And you can apply volume price analysis across the chart without having to worry about the crossover session, which came in way back over here somewhere. The two that caught my eye as Anna was talking, and I saw this one come in, lots of volume, a certain amount of buying under here, but a ton of volume, so there has to be decent buying in this one, and that's what triggered that rise, which we're currently seeing at the moment, up towards 76.29 odd. The other one was this one, which was earlier on, a few minutes before. Lots of volume coming in, lots of selling in here. Market tries to rally, big wick to the upper body of the candle, lots of selling in there. Bosh, the market rolls over. That's from 27 down to 22. As a scalping trader, that's perfectly fine. And what's going on at the moment as an up trade is perfectly fine. Also, just sitting in here. What we've also got to support this move, we've got some nice piece of volume gone in on that candle. Nice widespread, decent volume under it. Let's see what the next one does. It's a great way to practice VPA. If you can get the fastest chart you can get your hands on. Okay, now we've got some weakness coming in. We've got a bit of, we've got a wick to the upside. Pivots coming in there, decent volume under that. So expecting a reversal in price, which we're seeing. But below that, we've got some price support, potential price support here. It's not very strong. This one was absolutely huge. Once you get through this very, very wide band on the accumulation distribution indicator, which basically presents these levels in the strength by the width of the line. So the wider the line, the stronger that region. In other words, the greater the number of times that's been tested. You might not be able to see it here, but some of these little numbers up and down. This one, for example, has been tested 5 times. This one's been tested 2 times. This one's only once. This is 2. And up into to these much, much stronger levels, this red one. Once the market got through there, then you had some excellent protection in place for a trade to the long side, because you've got the volume point of control below, you've got volume falling away up here, you've got light volume up here, up into the light volume node area here, and you've also got this very strong platform in here at 27. So, and it was in fact tested here, but once it was through there, you check the volume out, is it good volume? And then we had this supporting candle here. We're now seeing congestion. What we're looking for now is the next leg up. We want to move through somewhere near 32. Nice candle, good volume, that's what we're looking for. Okay, we've got a lot of volume coming in on that one, but it's a not quite a long-legged doji, but it's going that direction. So we've got some indecision building now. The level here is pretty much the same as the previous one, so there's resistance building at 32. That one looks more in line, so this was just indecision, buying and selling going on in this candle. This is good supporting, that's okay, the volume's fine, so we're on up to the next level. 32 up towards 33. And this is what you have to do in these sorts of markets. If I flick that out of the way for a moment, it's still you know, a decent move on the 5-minute chart, which seems incredibly slow after you've been watching the 15-second. But nevertheless, that is what you have to do in these sorts of markets, because when all's said and done, this is the volume point of control. We're trading in a very, very tight range around here. I mean, just to put it into context, which really does tell it all in a picture, that is where we are, literally. We're in, I wouldn't say it's quite a razor blade. We've seen even thinner days than that. But it's very, very slice. It's very, very shallow, narrow price action. And if you're going to make money in these markets, then you've got to go down. And if you want to trade that fast, then you've got to go down to these sorts of charts. It's as simple as that. Now, what are we seeing? Classic reversal. Ton of volume comes in, big wick to the upper body. What's going to happen? The market's going to roll. It has to, because that's what that's telling you. And what you've also seen as a follow-on from that is you've seen falling volume under the down candles. So the probability is it's not going to fall that far. We'll see what this one does. Indecision on that one. Okay, modest volume. But this is the candle that tells the story. Ton of volume coming in, pivot to the upside, it rolls. It has to. You've got heaps of selling coming in here. The market's weak. Everybody's selling out. They've had this nice run up. Big operators in here, dumping like crazy. That's it, out the market. It rolls over. Now we'll see what happens, whether the support areas will come into play. We've got a single level here, which is pretty minor. We've got 2 more minor ones here, a little bit stronger here. This might hold, it might not. It's not that strong. If we can get on up to this next level at 34, then we're through into light volume areas again. The trend monitor is also helping to keep us in. It's been bullish ever since we got to this point. You can see the transition here. We went from bearish into the darker red, into dark blue, and out the other side into bright blue. Now we're starting to see maybe a shift in sentiment. Let's just see how that one plays out. And going back on to the relatively slow and modest speed of 5 minutes. Anna's got the 30. We're seeing, you know, some weakness come in. We've got a wick to the upper body, decent volume under that. In terms of what we're seeing on the 5-minute chart, we've got some very solid resistance here at 38. That's been tested 5 times, so that's fairly strong. And also a lot of volume up and down here. And we really only get away from volume acting as resistance to this move when we get up to 50, which is a way you know, on up the chart. And we've got this absolutely enormous level here at 44. which will almost inevitably cause the market to pause if it actually gets that far in the first place. And you can eyeball all of that. You've got all this price action, this price congestion that was going on since when about 11 o'clock. So there's sort of 2.5 hours of price congestion in here. And it's not looking terribly strong at the moment. But, you know, we've had a nice rally, and that rally has been reflected on the 15-second chart. There's a scalping trader. Absolutely plenty in there. But it depends on whether you as a trader are fast enough and light enough on your feet, first of all, to do the analysis, and secondly, if you actually want to trade at this speed, whether you're happy getting in and out of the market at speed. If you are, that's fine. It'll suit you as a trader. If not, you know, you've got to step away from these sorts of markets because they are tough to make money in if you don't want to trade fast. It just doesn't work because the market price action is too narrow to sit there for long periods of time. It's just a question of getting in, doing the analysis, watching the indicators, and getting out again. And it's these big, it's the volume all the time. Right now we're seeing, what are we seeing now? We've seen a transition. We saw this little bit of transition here, didn't follow through, remained bullish, but now we're starting to see a transition to dark red. That could be important to a transition through to bearish price action again. Okay, we're starting to see it transition there. Good volume under that last candle, so decent selling in that one. Little bit of a wick to the bottom side. But not particularly strong in terms of looking at buyers coming into the market at that point. So still pretty much selling there. Staying red for the time being. Look at the volume down here, very light. So if the market does fall through here, it should fall pretty quickly. The stopping point may be 76.27 here, 2.5 points below where we are at the moment, because we've got a very strong platform in there if it comes into play. These levels up here are pretty lightweight, so you know, they may or may not come into play, but certainly this one will, and certainly obviously the volume point of control down at 26.2. And there's another layer here as well. Just see how this plays out. Now we've got resistance coming into play overhead. And you saw there probably as that candle was forming, the width of this resistance increased from 2 to 3. In other words, it's been tested 3 times from below and acting as resistance. So it's getting stronger. It's a little bit like, I'm trying to think of an analogy. It's feeding on itself. So these are all dynamic, these indicators. They're not static things. They're constantly building and rebuilding. So as one is tested and holds, then it will indicate that by getting thicker and wider. So it's not a case of just drawing lines that are static on a chart. These are dynamic things. It's what we try and build into all the indicators, that dynamic aspect within the price action, which then helps you as a trader make sense of what is going on. So you don't have to redraw this stuff all the time. It's constantly building it automatically for you. So we've got a 3 here, a 2, a couple of 1s there, then we've got a 3 here and a 2. So we've got some decent, a decent platform building here. It's been tested over here and tested over here. And we'll see if it holds. Volume's kind of, you know, mid-range, nothing like this to give us a really strong signal. So let's drop that out the way again. Just going to switch off for a moment. Okay, back again. Let's see what the 5-minute chart looked like. So we had two signals of weakness here. We had the first one coming in, and then the second one, wicks to the upper body, trying to rally, falls back, tries to rally, falls back. Not a huge volume. This is the opening volume, which is always going to be, or generally speaking, is the heaviest volume of the session as we get underway. Come out of Globex, and then we run the 2 markets in parallel with the cash and the electronic running in parallel with one another. And part of the reason for hunting for a reversal was simply this. If we go down to the 30-minute, then the volatility candle was triggered here on the open. We had a huge amount of support in underneath in terms of price support. We also had the volume point of control in under here as well. So we were looking for a potential reversal anyway, just purely based on what was going on the first 30 minutes of trading. And even though you're trading up on a 15-second chart, it still gives you a heads up on why things are happening on the slower time frames downstream of you. You can see there, I'm not going to enlarge it, just like to keep an eye on what's going on across the other charts now. But you can see here the volume point of control is now building in this region because we're in congestion on 15 seconds. All these levels are constantly being rebuilt all the time. That's now gone to a 5. That was a 3, I think, before. Then it went 4. Now it's 5. In other words, it's been tested 5 times, so it's pretty strong. So it's every time it grows in strength, it's helping to cap off any advance. And the corollary to that is that in any move through there, it's got to be associated with good volume. So if this candle's going to break it, then we've got to see good volume. We're not seeing good volume. We're seeing a weakness in terms of volume falling away. So this is holding the market down at the moment. It's applying pressure to the market. And when we're trading in these tight ranges, then it's down to deciding where you're happy to get in, where those levels might be. Are you happy getting in if we go above 32? Or are you going to wait until we've gone 33? Down below to the downside, if we're going to go short, are you happy going in at 30, or is that too tight for you? Do you want to wait until it's at 29, maybe get through this strong level here? And then the next question you're going to have to ask yourself is, if the market does get through 29, for example, then I've got some a platform of potential support here at 27, which could well come into play. So I've only got 2 points of clear water, if you like. If it was at this region, it's a much better proposition because you've got very light price resistance and you've got very light volume in the way down here as well. So from moving through this region to here carries more risk than if it clears 27 and then goes all the way down to, where are we, 23 odd. So there's 4 points of clear water here as opposed to 2 up here. Seem to have breached that one. This is all held. We've got this very strong level above, sitting on top of the market, adding downwards pressure. Transition in the trend monitor, we've moved to bright red. We haven't gone through the full spectrum there. We've just gone into dark red and then straight out the other side into bright red. It's going to run up and have another test at it. If it holds, it'll get stronger. Okay. Still holding it down. But of course, if it does manage to get through there, it's a great platform for us. So it's a great place to get in. So if it gets to 32, you've got a ton of support underneath, protection rather, in terms of stop placement or how tight you want to put your stop. Now we're breaking through these other levels. Now the market should go, because there's very light volume, very light price action. If it goes through here, it should go pretty quick. You can see we've got rising volume underneath. Not quite as high as I would like it. There we go. Oh, we've got big long-legged doji coming now. Indecision, lots of volume. Can't really infer from that which way the market's going to go off that one. It's just, all it's telling you is indecision. It's not telling you about confirmation of trend or reversal in trend. It's just saying, hey, we've got indecision, lots of volume, lots of buying and selling going on in that candle, but no specific directional bias in terms of where we expect it to go thereafter, just that we've got indecision. 2-bar reversal, that's a 30-second candle. Another strong level here being tested. Decent buying volume under that one. Okay, now we're going to have another go down. Getting through these levels. Everything's constantly building and rebuilding the whole time. This is dynamic. This is not, it's not a static market. Now we're coming down to, key levels through here, 2750. We should be down to the next level. Let's just have a look at this on the slightly slower time frame of 5 minutes. There we go. Those were our two signals. Really, the weakness coming in here gave us the heads up. Would you have taken a trade off a 5-minute time frame? I very much doubt it, because it just looks too narrow, and it doesn't give you that comfort of a 5-minute time frame where you will be looking to take a decent trade opportunity for a lot longer than you're doing on 15 seconds. Let's be honest. But this is the nature of the market. When it's thin, you've got to go down fast. And on NinjaTrader, it's perfect. You can go down into the seconds, 15 seconds, or whatever you want. And all the indicators work in exactly the same way. I think I'm right in saying that on MT5, 1 minute's the slowest time frame. Doesn't go sub into seconds.
It's only minutes. There's no second chance.
And of course, the other alternative is to flick over to tick charts, which I've got over here. I'm not sure I've got the NQ on here. I've got the YM. Similar sort of price action. Let me just get my bearings. Okay, that's 233. This is 987 tick. Okay, this will actually seem quite slow compared to what we've been looking at for two reasons. Firstly, because it's the YM, it doesn't move at the same speed as the NQ, and certainly not the ES. And secondly, the tick charts are quite sluggish. As you can see up here, the participation. What the indicator, the tick speedometer, is showing you is showing the levels of participation, and when it's red, as it is through here, for example, this red and orange here, but particularly the red areas, are when the participation in the market is low. And when the participation is low, then you expect markets to range trade in relatively tight price regions. And it's only when you get these bursts of activity, as you've got here, that you're going to see some activity. Generally speaking, the price action will trade in the orange for a lot of the time. That's the norm, if you will. That's the expected levels of participation and volume in the market. And then you'll get bursts of green activity where you get pickup in participation, and conversely, when it dies away, it goes to red. And it's all there, it just graphically presents that to you. But it's also confirmed on the tick charts. You've got the VPOC here on the 987 tick. Actually, it should be 610, but I won't bother changing that. This is on 980. Let me change this one to 610. Let me change this one, sorry. I will change this one. Let's just put that one over to 610. There we go. So the volume point of control is really sitting everywhere, and it's just confirming what this market is doing, that we're range bound for the time being. But as we've seen on the 15-second chart, there are trades to be taken if that suits your temperament and you're comfortable taking trades at that speed. See where we are now. Starting to move away. And as I said, once we move to the upside, then you're into much lighter regions. You've got very little in the way of price resistance to act as a barrier to forward momentum. Decent volume under that one. A bit of indecision there as well. But we've now got a very solid platform of support in underneath in terms of the move higher. We get up through here, we've got light volume, as I say, so we should move through there relatively fast if we're going to carry on higher. It's not going to be a day when we're going to get 10, 15, 20 points straight off the bat. We've got weakness coming in again. Wick to the upper body, lots of volume under that one. See what the next one does, maybe a repeat. Might continue. Volume on that one is not as high as I would like. Certainly some weakness there, maybe enough to push it through.
If you stick the 30-minute chart up, you'll see what.
Okay.
Closed off my 30-minute.
2-bar reversal on that one, so we're expecting a reversal off that price action. That really is almost the same as this, but a slightly higher level. So again, it's just confirming that this market is very fragile, and the fact that you've got to be light on your feet. This is the 30-minute. You know, we're still trying to track up a way inside this candle. It's very labored. You can see the volume falling away here. So we've got 2 up candles. We've got volume falling. So this market is not going to roar up. And it's just a question of taking what you can out of it, or sitting on the sidelines and waiting for either this market to develop a real strong trend, which is probably unlikely given the scenario so far, or you just wait, either go off to look at another market, or you decide that, you know, today is not for you and you've got to wait for a bigger move tomorrow maybe. I'm going to pass back to Anna at that point.
I didn't go on to the second chart. I was just, as I said, looking back at the 30-minute candle that we have here. This is the retrace back into the spread of the candle, the move high. I know you've got wicks to this at the bottom of this candle. What's a bit concerning with the one that's just closed off is that while we've got a wick to the bottom of the candle, and obviously there was the follow through from that one, this is what you don't want to see. This is not good, is it, David? No, rising prices and falling volume. Now, what I also said was the 30-minute volatility candle is printing its own high and low, obviously, and you can take that to be resistance and support. We've had this nice move higher into this candle, and that's been reflected, as I said, much more eloquently on the 15-second chart. And but it could simply go sideways now. It could simply stay within the range of this candle until something happens, or towards the end of the session, then it will either break to the bottom or the top. And it's all in the context, as we said, of the daily here. This is the slither of price action that we see at the moment. As Dave says, catenary, this sort of this parabola effect. And just reflective of the fact that it is approaching, and it is still approaching, the all-time high. It's just a characteristic of markets. When they reach these dizzy heights once again, everybody gets terribly nervous. It doesn't mean it's not tradable from an intraday perspective, but you have to factor that into the, if you like, the mood, what I call the mood of the market, rather than the sentiment of the market. So let's just have a look again on investing, what's been happening. The S&P is actually down very slightly. The Dow's not. That's the cash Dow, very, again, all suffering from the same affliction. And the VIX is moving lower, which, is positive for equities. But as I said, they are all at these very, very key levels. Anything else you want to say to that? Yeah, so we'll see what happens. Actually, that's sort of at least we had some nice price action, very fast price action. I hope you enjoyed it. We looked at we've not done the second charts before, have we? We always talk about them. I think they're great, and as David said, I think if you have Ninja, well, I think most of you do who come along here, it's a great way to practice volume price analysis. Just read the candles, read the volume underneath it, and just say to yourself, have more than one time frame up, and just say, what am I seeing here? Am I seeing weakness? Am I seeing an anomaly? Is it, what is actually happening? And just, take it from there. And because you'll see it once, you'll see it you'll see it in other markets and you'll see it in other time frames. And what we always try and say with volume price analysis, the one thing it does more than anything, above all, what benefit is it to me as a trader? Well, other than you will it does anticipate where the price is likely to be going next. That's the first thing. But secondly, it also takes that emotional sting out of trading, because you are in control of your emotions. You don't really have any emotions, because what you're applying is your prefrontal cortex. You're not being, your amygdala is not constantly being triggered. You're not in fight, flight, or freeze mode, which a lot of traders get themselves into. They get themselves into a terrible emotional turmoil when they see the chart sort of moving up and down, flickering, and that's what VPA will do for you. So I think we'll stop there. We've had almost an hour, and as I said, we'll see what happens with certainly on the NQ. I'm sure there'll be lots to be written about it later on once the market has closed. But for those of you who maybe are not familiar with our indicators, they are from quantumtrading.com. If I just bring up the site, here it is. You can see here MT45, NinjaTrader, and we've also have them for Trading View. Although on Trading View, I think we've got them all except some of the Forex ones, haven't we? We've got the CSI. I know we're not talking about Forex at the moment. And if you scroll down to the bottom here, in the individual indicators are detailed with videos and support pages for both for customers, and if you're interested in knowing a little bit more about them and how you can use them. You can buy a single indicator, you can buy a bundle, or you can buy the complete package. The advantage of starting with one is that if you then want to move on to more than one or the package, you will always get a credit for what you have paid for and bought. If you buy the package, go straight to the package, you can buy it on an easy payment plan over 3 months. And the other advantage is that when we develop new indicators, they are automatically added to your package. On top of that, we have a 7-day money-back guarantee and 24/7 support, and it really is 24/7, 365 days of the year. David, is there anything else you want to say? No, that's it. We are back now. We're back next week where we start all over again. Are we back next week? Because that's Easter, isn't it? That's the Thursday. It's Maundy Thursday, isn't it? To be honest, and we're not sure, because as I said, it's just the start of the Easter holidays. So just keep an eye out for your emails. If maybe we'll bring it forward a day or something. We'll see. Otherwise, we'll see you after the holidays. Whenever we see you between now and then, enjoy your trading, have a great weekend, and thank you so much for coming along, and I hope you enjoyed it and learned something that maybe you did not know before.